Hi everyone, hope you're all doing good. So in this video, we are going to talk about an algorithmic trading pattern. We will talk about identifying an important algorithmic trading activity using price action, and we will see how that particular pattern will help us to find market reversals and highly profitable trading opportunities. So this is an interesting concept. Make sure to watch it till the end and also click on the thumbs up icon and also click on the notification bar. Let us get started. We are going to discuss about an algorithmic trading pattern. So I know most of you are already aware of this. In case if you are not sure what is algorithmic trading, let us discuss. So algorithmic trading is also called as automated trading, black box trading or algo trading. It's all about using a computer program or a bot to do the trading. So if you're an algorithmic trader, you will design a software or you will design a automated trading bot which does the trade by itself. You'll be automating your trading strategies, and that particular software or that particular trading bot will execute the strategy by itself. So these trading bots are known as algorithms. So most of the time algorithmic trading is used by big players like financial institutions and investment banks. Nowadays we can also see normal retail traders engage in algorithmic trading, but the scale of their activity, or if you look at their capital size and if they look at their technological advancement and the type of algorithms they use, they are no match for the algorithms used by big players like institutions and investment banks. These algorithms, they are highly dominant on lower time frames. So most of these algorithms are dominant on trading in lower time frame, and they use strategies such as scalping, day trading, trend trading, etc. So most of these algorithms, the algorithms which are designed by big players, they are often designed based on strategies such as scalping, day trading and trend trading. And here is a bad news for most of the retail traders. So they are one of the major reasons why small traders and retail participants find it very hard to succeed in day trading or intraday trading. So these algorithms, since they are dominant on lower time frame, most of the time whenever they engage in the market, their activity can create a lot of volatility and lot of noise on the price movement. So because of the volatility and because of the the noises in the price movement, retail traders and small scale traders can find it very hard to succeed in lower time frames. If you're a day trader or intraday trader, essentially you're trading in lower time frame. And here is the good news. With the help of price action and market dynamics, we can identify their activity on the chart. So if you have in-depth knowledge of price action, you can identify these type of patterns just by observing the price movement. If you develop the skill to recognize these patterns, you can identify these patterns, you can design a trading strategy out of them, and with the help of that particular strategy, you can find high probability trades, trades that can give you very good risk reward and high returns. So today we are going to discuss about one such pattern. So the algorithmic pattern which we are going to discuss about today is known as thrust rejection. So thrust rejection is a price action pattern which are created by the behavior of reversion algorithms. So we have the diagram of both bullish thrust rejection pattern, and we also have the diagram of bearish thrust rejection pattern. As I said before, these thrust rejection patterns are created by the behavior of reversion algorithms. So reversion algorithms are nothing but a specific type of algorithms which often trade against the existing trend. They often trade against the existing market sentiment. For example, whenever the market becomes overvalued, these reversion algorithms will take short positions or bearish trades. Likewise, whenever the markets become undervalued, these reversion algorithms will take long trades or bullish trades. They often execute the positions at the turning points in the market. Let us look at this particular pattern, how it looks like on the chart. So here is a screenshot of bullish thrust rejection pattern. So let me walk you through this particular pattern. Let me walk you through the anatomy of this particular pattern on a step-by-step process. So first of all, you will have a falling market. The market prices will be falling down. Within the falling market, all of a sudden you will see a sharp shadow or a sharp wick which looks like a rejection. The wick that you see here, right? This large shadow that you see over here, this particular shadow is telling us that the algorithm is actually trying to accumulate the shares. The mean reversion algorithm is actually trying to buy the shares, and that's the reason why the prices went all the way to the bottom and quickly got rejected back to the upside. So right after this rejection, you can see the prices went up for a while. The prices, just two candles shot up, and then right after going up for a while, quickly we saw another sell-off. Right, the prices quickly fell right after that. And this particular sell-off is more like a retest. And this particular sell-off is actually caused by sellers who expect the prices to go even downside. So the people who see the downtrend, right, the people who see the previous downtrend, they think, all right, the market is most likely to go down, and they execute a bearish trade. They try to take a bearish position. But unfortunately, what happens is this turns out to be a retest. And right after this retest, once this particular retest becomes successful, all the sellers will become trapped. The sellers who entered into the position late, right? All those uninformed sellers and all those retail sellers, they will get trapped in the market. And right after that, quickly the prices will change the direction. You will see a quick price reversal. So you will see a rejection, you will see a retest. Right after the retest, the prices will quickly change the direction. So this is the anatomy of bullish thrust rejection pattern. This is the logic behind the bullish thrust rejection. So once again, you will see a falling prices, and then you will see a large shadow which is getting rejected from the bottom. Right after the rejection, you will see a retest, and if this particular retest is successful, the prices will change the direction. The market prices will quickly turn around. Here is a quick example of bearish thrust rejection. So the bearish thrust rejection is exactly opposite of bullish thrust rejection pattern. Here you will be seeing rising prices. The prices will be making higher highs, and within the rising prices, all of a sudden you will see a sharp rejection from the top. You will see a long shadow, or you will see a long wick just like this, which indicates the rejection from the top. And this particular rejection is telling us that algorithms are distributing the shares. The algorithms are selling the stock. They are actually trying to clear their holdings. So right after this rejection, the prices may fall for a while. Right after the fall, quickly you will see another retest. And this retest is nothing but it is caused by buyers who expect the prices to go even higher. So all the buyers who are looking at the previous trend, and the buyers who are expecting that the trend will continue, they will try to buy the stock over here. And what happens is this turns out to be another retest. And if this particular retest is successful, the buyers will get trapped. All the uninformed buyers and retail buyers will get trapped by this particular false move. And all of a sudden the prices will change the direction. You will see a quick price reversal. So this is how bearish thrust rejection works. So once again, you will see rising prices. You will see a rejection from the top, which indicates the behavior of algorithms. Right after the rejection, you will be having, a quick sell-off. You will witness a quick fall in the market prices. Right after the fall, you will see a retest, and if that particular retest is successful, the market direction will completely shift. The market sentiment will change from bullish to bearish. So both this bullish thrust rejection and bearish thrust rejection pattern is highly dominant on lower time frames. Since this is a algorithmic trading pattern, this pattern has high probability when you are trading this in lower time frames, such as 5 minutes, 15 minutes, and 1 hour, 30 minutes, etc. So these are the time frames where we can see highly dominant algorithmic trading behavior. Since this is caused by algorithms, the probability of this pattern is very high on lower time frames. Alright, since I'm running out of time, I have decided to make this particular video into two different parts. So this is the end of the first part of this video. In the second part of this particular video, I will walk you through some actual examples on the actual charts. But right now, let us recap and let us try to come up with a conclusion of what we have learned so far. So first of all, thrust rejection is a price action pattern created by reversion algorithms. They are highly dominant in lower time frames. So if you are planning to trade this particular pattern, you need to trade them on lower time frames. It's a high probability market dynamics pattern. This particular pattern helps us to spot and trade the market reversals. Let's catch up in the second part of this video. Make sure to check it out. And also, if you have any questions or any feedbacks, leave it in the comment section below. Also, if you like this particular video, if you like what I'm sharing here, kindly like, share and subscribe so that you can receive more insightful trading strategies. Apart from that, if you want to learn price action trading strategies and some high probability trading techniques, you can browse through my website, that is www.tradingcoach.co.in. Once again, it's www.tradingcoach.co.in. So thanks a lot for listening. Have a good day.